Options is like Chinese for somebody who doesn't know it. There's new terminology, and it takes a little bit of time to understand the different. What is a put? What is a call? What is an option? What's the idea of the option?
Yeah, many people just shy away from options because I'm like, oh, I don't know what it means. It's just very
So
futuristic.
I'll finish the growth quickly, and then I can explain options very quickly as well. So O is about options, understanding the options. U is about implementation. You need to implement. If you know all the knowledge in the world, but you don't implement, means you can read books about riding horses. You will never be able to ride horses. You need to go and start riding horses.
Welcome to the Bricks and Banks podcast, where real estate meets real wealth. Whether you're building from the ground up or stacking your paper to the ceiling, Steph breaks down property power plays and money moves you can act on. From first-time buyers to seasoned investors, this podcast is your blueprint for financial freedom through property, investment, and business. Subscribe now. It's time to build your future. This is Bricks and Banks with Steph.
And we are live. Hey everyone, welcome to another amazing episode of the Bricks and Banks podcast. I'm your host, Stephanie, and with me today is Fadi Habib. Fadi is connecting with us today from Toronto in Canada, and he is a growth analyst. He is a professional who is interested in wealth building, teaches his wealth professionals, and he's here to share his insights. So welcome, Fadi, to the show.
Happy to be here, Stephanie.
Can
Thanks
you
for
give us a
inviting.
brief introduction about yourself, what you do, and why you're here?
Okay, so my name is Fadi Habib. I am the founder of Legacy Wealth Builder Academy. And what I do is that I help busy professionals invest responsibly in the stock and the stock market using options and stocks.
Yeah.
A little bit about me: I have been in the industry. I came to Canada something like 25 years ago. Did a master's in engineering. I'm an engineer. I worked in a lot of multinational companies, some of which are oil field, like Schlumberger, in manufacturing, like Celestica, high tech, like BlackBerry. You know BlackBerry?
Yeah, I know that.
I also worked in insurance, and the last 6-7 years, I'm a professor. I like teaching a lot. So I teach in some of the colleges and universities here in Canada. But my passion is most of my life, I knew that building wealth cannot really happen from the 9-to-5 job. So I was very interested in teaching myself how to invest, basically. I read this book called Cash Flow Quadrant by Robert Kiyosaki.
Right, Kiyosaki.
And it's a great book. Everybody should read it. So I recommend it highly. I learned that there are 4 ways of making money. Being an employee or an E is just one of them. And you're getting the worst deal, basically, in terms of you pay taxes even before you money. You work a lot. You're basically using your time to make other people money. There's self-employed, whereby you using your time to make money for yourself. There's the business owner who use other people's time to make money for himself or herself. And there's the investor who uses other people's money and time to build wealth. And that basically the book says that you have to move from the left part, being an employee or self-employed, basically exchanging your time for money, to the right part, which is business owner and
I quadrant.
an investor. So I taught myself how to do, I took a lot of courses. I took a lot of courses to teach myself. And that's what you need to do, because if your parents are not wealthy or can't really coach you in learning how to invest yourself or go about doing this stuff, then you have to do it by trial and error. So I spent a lot of time teaching myself, taking a lot of courses, because I was very green. I didn't have any experience in real estate investing or investing in the stocks. So I used to go to work 9 to 5 and then 5 to 12. That's my kind of extracurriculars. Very well in investment, and I'm coaching people how to get out of the rat race, basically. I can talk more, but I'll stop now and then I'll wait for the questions.
Wow, thank you so much for that. And at what point, I know that, yes, reading the book, because even for me, I read that book fresh out of school, out of uni. I graduated uni at 21, so I was already a chartered accountant by then. So after that, I read the book Rich Dad versus Poor Dad by Robert Kiyosaki. And when I read that book, I'm like, oh no, I wasted so much time in school. I could have just started a business. So I was sort of resenting my degree at the point that, like, why did I go all the way to get an accounting degree and all that when I could have just started a business? So for a time, I was resenting my degree, but later on, I'm like, okay, I'm going to make use of the skill I've learned to move. Because then I read the cash flow quadrant, and he explained that yes, you would most likely start from the E quadrant, which is the employee stage. Then you build up yourself and move, but your goal should be to move to the BNI part of the
Correct.
quadrant, the right
And
side of the game.
yeah, and
Yeah.
if I look at myself, I always had good high paying jobs, but I'm always
Yeah.
tight on money, always.
Yeah.
So I can't go to the trips that I want. It seems that especially after I bought a house, I just cash is like, it like I'm getting high salary. Of course, I'm getting taxed a lot, especially in
Yes.
Canada. It's just so bad. So I'm getting taxed a lot. I'm always not having, and we're getting taxed on everything. So we're getting taxed income tax. And then after we get the rest of the money, we get taxed on everything we buy, sales tax. And then if I have a house, I'm paying property tax. So it's double or triple taxation on each and everything.
Yeah.
And I'm always tight on money. You really need to have investments to get out of this loop. It's a death spiral, basically. And basically, what I did is that I actually, throughout the years, I've been working on it for a little bit. I'm not completely out of the rat race because I still work part time as a professor, and I love it. So that's the only reason I'm doing it, because I love it.
Yeah.
I moved all my work offline, like online, so I can be on a trip to Egypt. So last year, for example, I went for 2 months to Egypt,
Wow, nice.
and I was still like, I used to like, what I like as well is that I changed all my life to online, as well as the type of job is that it's not 9 to 5. So I need to be there at the class time, but I can do the marking and all the other preparation stuff at a time that I want. I can work at 2 a.m. in the morning because I love to. So I have a lot of flexibility. And what I was really after is the freedom, not just the freedom of money, it's freedom of time, that I control my time, the freedom of location. I can be anywhere and do what I need. So right now I'm teaching at the college and universities, as well as I'm coaching people on, basically I have a 12-week program coaching people how to responsibly invest in stocks and options. And I love it. So it's not really work for me. So it's going basically well. I like it, but I worked a little bit on it. Didn't come easy.
Yeah. I mean, I like the fact that you said you're working and it's good to work, and you're also giving back to community because you've started a business, you're training other people on generating wealth, and you still found that time to give back to the community, to give back that knowledge in form of teaching others in the university, which is rare because most people would just want to make money and gatekeep, but you're not doing that. You're giving value to people, and you're also training the younger generations. And I titled this episode "The Growth Formula: Fadi Habib's Roadmap to Financial Freedom." And I know you've said it before that it's a journey. You're not there yet, but you're on the journey. So, what would you say was your breaking point moment where you realized that you needed to be on a different financial path?
The breaking point was uh, uh, um, the pain that I felt, that I did everything that I was told to do in terms of getting a good job, getting good education. I had a master's in engineering. I worked really hard, uh, but I'm not getting what I want. I'm not getting a fair deal in terms of I want to progress, uh, uh, like wealth wise. So that was the breaking point in terms of, and also as I moved, like, again, I worked for 25 years in terms of corporate, the 9 to 5, and it's very stressful because I'm the type of person who puts everything, pours my soul into work. And a lot of times, again, I was a program manager and a project manager, and I'm always responsible for other people's, not that they report to me, other people's work And it's very stressful when there's competing priorities for different departments. I can tell you at some point the stress was too much that I had a heart attack at age 37.
Wow.
I'm good. I actually didn't know that it's a heart attack. so, I was watching a movie with my wife. We're like very relaxed watching a movie, and anyway, bottom line is I learned afterwards that 30% of the heart attacks come silent, means there's no pain at all. Anyway, I'm good. There's no issue at all. But at that time, the breaking point was I had to think of, I just didn't like the way I'm spending all the time at work, being so stressed. You know, this thing when you know that you're working, but you're not feeling that you're contributing or giving value. It's very different than now. Now, I like making money. Everybody should be making money. There is absolutely nothing wrong. Actually, for me, it's a crime if you can make money and you don't. It's really it's related to how much value you're giving other people around you. So I'm making money, but the best thing is that I'm making on my own terms in terms of working on stuff that I like I'm passionate about teaching. I'm also marrying this with the fact that I'm very passionate of helping people become better financially. So one of the quotes that I don't know who said it, but really it says that if some people are looking at you and they're not really sure if you're working or playing, that's a level of mastery that you should be striving for. And that's what I strive for, is that I'm actually not sure what I actually do and teach and coach people, whether I'm playing or working, which is really great because I'm very, I'm very patient with my time. I'm very generous with my time. And I don't feel that I'm giving anything more. It's just that because I enjoy it so much. So this is where you want to be, where you're working on something that you love, you are passionate about, that you don't care to give 2 hours instead of 1 hour because you're playing, really, not really work.
Yes, amazing. And you said you're so passionate about that. You even gave a TED talk. Can you share about your TED talk experience, your TEDx experience?
Correct. Okay.
Yeah,
So again, part of the perks of having your freedom of time, I
yeah,
helped my son. My son was 16 years old at the time. He figured out that you can actually organize a TEDx event, TED Talks.
yeah. That's
So
it.
you can apply for a license. So he did by himself. He went, I coached him, again, part of my coaching. I coached him. I didn't take money from him. So I coached him to fill the application. He went and got the license to organize the TEDx event. So I was a co-organizer with him, but he was the main person. Again, he's 16 years old. He created a team of people. He had a sponsorship team under him. He had marketing team under him. And for a year, I coached him because there was a lot of problems in terms of the space and stuff like that. And he got sponsorship from University of Waterloo for the space, and he had applications. So the speakers were applying and he used to review the applications. And of course, like any good boy, anything I say, he used to go do the opposite. So I said, my life, this speaker is good. He said, no, it's not as bad. It was a really great experience for the kid.
Yeah,
And for me, being able to spend all that time, of course, it's all volunteer work. We didn't get a dime. Actually, I spent on the event, but great experience organizing it. And people were so happy. And he got a lot of people after the event saying, yeah, when are you going to
the next
organize
one.
the second one? I want to be a speaker and stuff like that. Yeah.
Yeah, that's amazing. Talking about the second one. So I know that you're big on, like, being a wealth coach, you're big on stock market investments, options investments. So the thing is, a lot of people view the stock market as risky and overwhelming, especially right now, given the trade wars that's happening. The market is very volatile. Everything is just going haywire. So, how does options investing differ from traditional stock investing? And how would you advise professionals or people that are just getting into the market? How would you advise them to make their first step?
So let me start with the story. The story says here, it's my story. I started as a real estate investor, and I actually thought that anybody who invests in the stock market is an irresponsible person. Yeah, that's what I had, this belief, because everybody was losing money. So I'm thinking this is a casino. And this is secret number one, because I'm going to share a few secrets here. It's very basic, but it's very important. Secret number one is that it's not a casino. The fact that everybody is treating it as a casino does not make it a casino. What I'm saying is, if the stock market is not a casino, the stock market, it's an auction. You're buying and selling businesses. It's not buying lottery tickets. So if you approach the stock market as if you're buying a lottery ticket, all what you're going to get is that you entered a casino. So to explain this, anybody who wants to buy a refrigerator spends hours and hours trying to figure out what is the best refrigerator, right? They make researches on what is the expense, what is the charges, what is the capacity, is the specification correct, will it fit in the space? The problem here is that when people go and buy stocks, they don't spend any time. Most people buy stocks because they heard somebody else
Say buy
bought a
at this
stock,
price
or
point.
they see a stock that went up so much, they buy. The normal behavior of a person is that they will buy at the top of the price and they will sell it at the bottom because they have no strategy. They don't understand what's happening. So secret number one is that it's not a casino. Do not treat it as such. If somebody is buying a rental property, they will go and ask themselves and they will make research on like normal questions. What is the rent? What is the expenses? Is it cash flowing? What are the taxes? What, like, they will ask questions that any person, responsible person will do. Even real estate investors, when they go to the stock market, they don't ask any of that. They just buy. So secret number one, it's not a casino. Don't treat it as such. You need to understand that you're buying a business. Secret number two is that people sometimes think that they will get rich very quickly. So the trader mentality, the speculative mentality of I'm going to buy something now and I'm thinking it's going to double tomorrow. It's not. That's a weird expectation. It's unreasonable. Long-term view is much more useful than a short-term view. So I'm teaching people responsible investing. It's not that we do long-term only, but the idea that you need to know what is a good stock, how to evaluate if the stock is good or bad. It's basically one thing. The main thing is because it's a business, the business is evaluated on, is it making money or not? Is it making profits or not? So it's really logical. And if you give away the idea that you're going to buy something today and double it tomorrow, or it will increase every day, you will be much better. Peter Lynch said that there's absolutely no correlation between the value of a stock and the price of the stock on the short term. Short term is 2 years, Stephanie, in the stock market. A stock can be really, really good, and you can see the price of it going down, down, down in the short term, because the stock market in the short term is not a rational thing. There's absolutely no correlation. So looking at the price of the stock and trying to think whether the stock is good or bad is a really sure way to lose a lot of money because it's wrong. The problem is nobody really teaches people this stuff.
Yeah.
Peter Lynch also said that there's 100% correlation between the value of the stock and the price of the stock. What does this mean? And how can we use this in our advantage? If there is a good stock, let's say Meta is a good stock. Again, I'm not giving financial advice, but Meta for me is a good stock. If Meta is a good stock and making a lot of profit, Apple, for example, making $90 billion per year in profit. If Apple is a good stock and then COVID comes and then you see the Apple stock going down, 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 down. The fact that the price went down doesn't mean that the company is doing bad. A lot of times the stock market gives us opportunities in terms of the price goes down, even if the stock is really good or the business is really good. An example of that is Meta. Meta at some point was $400. And then within a year, it went to $80, lost 75% of its price. And then within a year, it went up to 700. So what is the morale of the story? If people don't understand that Meta is a good stock, what will they do when the price goes down? They will panic and sell. The normal behavior of a person, if they don't understand it, if they treat the stock market as a casino, is that they will buy at the highest point.
Yeah.
And they wait till it goes down, they will panic and sell, locking down the losses. However, if somebody understands that Meta is a good stock, what will you do if the price goes down? They will buy more. They will buy more because it's a good stock. And knowing what Peter Lynch said, that because it's a good stock means in the long term, it will go up. Very important secret or a paradigm shift that needs to happen. Another secret as well is that people don't understand the behavior of a normal market. Basically, what I'm trying to say here is that if you believe that, let's say, if I look at my child and I see that they are inhaling, then exhaling, but I think that exhaling is wrong. He shouldn't be exhaling. He should be taking oxygen all the time. So when the kid exhales, I will be thinking I need to do something to fix that. I will need to get a doctor. Going back to the market inhales and exhales, goes up and then exhales, goes up. That's the normal behavior. Up, down, up, down. And there's a studies that tells us going up very slowly takes a lot of time to go up, but goes up a lot and then goes down quickly. That's the normal behavior. So we know that 3 times a year it will go down by 5%. We know that. There's absolutely nothing new about it. We know that once a year it's going to go by 10%. We know every year and a half it will go down by 20%. Every 2.5 years to 3 years, it will go down by 30%. So when it happens, everybody will be screaming and panicking.
Yeah.
But for us, it's just exhaling. For example, the last 2 years, the market went up really, really well. So it doesn't matter whether there is a tariff problem or not, the market will have to correct a little bit. So if the tariffs were not there, the market would have corrected. It went down by 20%, up like 5-7%, it's going up. So that's another secret, is that if you don't understand the normal behavior, if you think that your kid should always inhale, you will be doing some stuff that is irrational. You will try to fix stuff by selling at the wrong time. Yeah, anyway, there's a lot of myth, and people need to understand the normal behavior of something. Like, if you think that the refrigerator has to cool the thing all the time, you will be panicky when you hear it stop, because sometimes it stops, right? It reaches the
Yeah,
required
it does.
temperature. So a little bit of education goes a long way.
Yeah. Thanks. I feel like I'm learning so much with just this session. And it just basically reminds me of, because I had a similar guest come through, and he is a day trader. He explains how, when to buy stocks, when to get out of it, and all that. So this is just basically fine tuning everything that I learned in that session. I
But
know one of the,
I have to
sorry?
say that I'm not a trader. I'm not a
Yeah,
day
I know.
trader. And so let me say about that. With all respect to everybody who's a day trader out there, there's different kinds of investment in the stock market. There's the Warren Buffett way, which is he buys something and waits for it like for 40 years, right? That's a long, 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 long term. There's also swing trading, where you go in and out within like maybe a month. There's day trading, in and out in a day, and there's something called scalping, which is go in and out in 3 seconds or so. The more you go from long term to scalping, the more you need tremendous amount of time and tremendous amount of skill. Okay. So I can tell you that I am around, and the amount of people who say they are day traders, again, I'm not talking, I don't know who you invited. What I'm saying is that for the masses, relying on day trading is not a reliable way to make money, because you need tremendous amount of skill, tremendous amount of time. And I would like, if somebody says he's making money, that's the problem also with a lot of the people out there, is that when somebody says they are a day trader and they're like, I made $100,000 in one transaction, I doubled my money in 3 months, ask him or her, how many accounts did he blow up? Because people sometimes report their gains and they hide their losses. Okay.
Yeah.
So don't do that. Right. So day trading has a lot of gains, but has a lot of losses. A lot of people around me, when you look at the whole thing, very, 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 very few are actually successful on the long term. If you have a 9 to 5 job and you're busy, it's also, what I'm saying is that if you have time, you shouldn't go for day trading. But even if, like, when you don't have time, it's really unreasonable, because it needs a lot of time. It needs that you
Yeah.
look at your screen from 9 to 5, especially if you're going to the day trading and scalping. So what I teach is that there's a different way of doing and getting really decent ROI with only 10-15 minutes a day. You don't have to be there all the time, because the more you go to the long term, again, we're not really long term like Warren Buffett, because he's the master of real term.
Yeah.
We need to make money a little bit quicker than that. But you need to figure out the risk of, not the risk, the balance between how much time you're giving, how much skill do you have, versus what you need, what you want out of investing.
Oh, okay. Okay, that makes sense. So I know you talk about the growth system, G.R.O.W.T.H. It's a 6-step growth system, which
Okay.
is at the heart of your teaching. So can you walk us through
Yeah.
that
Okay. So the first thing is G, which is goal setting.
goal setting thing?
Let's say if you want to go from your city, in your London, right?
Mm-hmm.
If I want to drive from London to Paris, how much time would it take?
Roughly about 3 hours, 2.5
Okay, let's
hours
say
or
3
3 hours.
hours. Let's say 4 hours. If you decide, if your goal is to be there in an hour, what will you do if you're driving and you want to reach there in an hour? You have to drive at 400 kilometers per hour
Faster.
to reach
Yeah.
there. Okay. So what I'm saying here is that if you have a wrong goal, you will push yourself to do stuff that is wrong. So if your goal is to double your money every 2 days or every month or every year, you will find yourself doing stuff or strategies in investing that is very risky. One of the, again, secrets is that you cannot disassociate risk from the ROI. Somebody comes and tells you, if you buy a lottery ticket, you can win $500 million. Okay, good. That's a huge ROI. But you got to ask yourself, what is the risk? The risk here is that most of the time when you buy a lottery ticket, you will lose the money, the $5 you paid. You will lose it all the time because from a probability point of view, the chances of you winning the lottery doesn't change if you buy a ticket or not. So first thing is goal setting. I like to tell everybody that the goal should be around 24% per year, 2% per month. And basically that's a good balance between the ROI and risk. The game, Stephanie, is not about making money. The game is how to not lose money. It's very important to know how do other people lose money so that you don't do it. If you're spending 1 unit of time, 1 hour learning a strategy, how to make money, you should spend 3 hours on how, and that's what we do. So R is, I'll talk about R, but basically the right goal is correct. The market usually, if you buy the SPY, which is the ETF of the S&P, which is the like 500 companies in a basket, the average is about 10, 11% per year in the last 50, 100 years. So if you're doing 24%, that's double the market. That's really good. And in 24%, you double your money every 3 years. That's more than enough. You should not be taking more ROI. Why? Because if you take more ROI, means you're taking more risk. If you're oblivious about the risk, doesn't mean it's not there. The whole game of learning how to drive a car is not about how to move the car, because any fool, I tell my 17-year-old son, just push the gas pedal and it's going to move. The whole game, the whole training is how to prevent yourself from getting involved in an accident. That's risk mitigation. Okay. So that's the G, goal setting. Number 2 is the R. R goes to research stocks. You need to know if the stock is good or bad. That's vital. A good stock means the business is making money. If the business is not making money, I do not label it as a good company or investable company. In the 6,000 stocks in the market, for me, there's only 1% that is investable. So, and using automation, like there's some screeners, free screeners, you can actually search on what are the companies that are making money, good ROIC, low debt. Very easy to find out. And also you need to understand how to read balance sheet income statements, which I teach people in 10, 15 minutes. Not a big deal if you know where to look. So in the income statement, for example, it's called net income. Look if the company is making money. It's so easy to figure out, compare Apple and BlackBerry. One of them is making $90 billion a year. The other is losing money. It's easy to know if this is a good company or a bad company. So the whole second module is about research stocks. Third is options mastery. Options is like Chinese for somebody who doesn't know it. There's new terminology and it takes a little bit of time to understand the different, what is a put, what is a call, what is an option, what's the idea of the option.
Yeah, many people just shy away from options because, like, oh, I don't know what it means. It's just very futuristic.
So I'll finish the growth quickly and then I can explain options very quickly as well. So O is about options, understanding the options. U is about implementation. You need to implement. If you know all the knowledge in the world, but you don't implement, means you can read books about riding horses. You will never be able to ride horses. You need to go and start riding horses. So in the implementation, I always teach that you have to have a paper trading account. What is a paper trading account? It's free to open, by the way. Paper trading account is an account whereby they give you $1 million, fake money, monopoly money. And if you make money, you trade same as the real everything. If you make money, it's not your money. And if you lose money, you didn't lose your money. So it's a very beautiful way of trying a strategy. And for me, that's the responsible way. You shouldn't be putting money in something that you just heard yesterday. And I tell people, like in my 12-week mentorship program, that it has to be in paper trading account. And after you go month or 2 or 3 in the paper trading account, you have no business going to live trading with your own money before you see that you made money in the paper trading account. So because if you're not making money in the paper trading account, it's either what I taught you or whatever anybody else taught you is wrong. Maybe you didn't understand it. Maybe you make mistakes. This is the sandbox where you make mistakes and learn. And with a 12-week, when you go and do paper trading, people are very confident after the 12-week program implementing that because they made all the mistakes. They know that they can make money. They've proven the concept. Now and only then you can go and start live trading. And then you need to, T is tame your psychology. Again, the formula for me is 10% learning strategy, 30% is risk mitigation, learning how to not lose money, and 60% psychology. If somebody's addicted to gambling, it doesn't matter how much you teach them. If they want to go, like they know how to evaluate stocks, but if they go to risky stocks, you're not really in control of your psychology. I'm okay if you have $5 million account that you put 5K, for example, in something that is risky. But if somebody has K or 10K or 5K and they put everything in very risky, that's not really, somebody is not taming their psychology.
Yeah.
And the last thing is you always learn more. So that's the cross system. Goal setting, research stocks, options you need to implement in a paper trading account, tame your psychology, and continuously learn.
Oh, amazing. So did you learn that from a book or you just craft and designed it yourself?
No, I didn't. I did not find this in a book. This is my way of.
This is yours,
Here's the thing.
original.
I took to get to the point where right now I spent, I don't know, something like $200,000 in different courses. Again, it's very expensive. It's very expensive if your parents are not investors, right? So, but again, I'm so passionate about this. So I took a lot of courses. I did a lot of trial and errors. So I made mistakes. I made a lot of money. I made mistakes. And basically, I put all the elements that I see that are missing in the, so when you take courses, every course has really good stuff in it, and there's some stuff that are lacking somehow. So when I designed my course, my system, I had this privilege of seeing a lot of different offerings out there and making sure that I plug the gaps in a lot of them. I'm not saying I'm the best. What I'm saying, this is how I did my system, as well as some courses, they focus on one thing and don't talk a lot about it. I ask myself, what is the main things that are needed for somebody to be successful? It's not just learn, like a lot of courses just look at the strategy. They don't talk a lot about risk mitigation. So that's important.
Yeah.
Some of them look at the fundamental analysis of how to evaluate a good stock. Some of them don't. Some of them look at the charts without looking at the fundamental analysis. Some of them give you a course and just forget about you. That's why mentorship is very important, right? So I put all of that in this package, the one that I wished I had when I started.
I like the fact that you emphasize a lot on risk mitigation because that's where you draw the line between gambling and proper stock trading. So what would you say is the biggest mistake you've seen new investors make when it comes to managing risk?
Okay, so the first thing is I'm not going to repeat the secrets that I said or the myths about the stock market. So very quickly, do not use it as a casino. Okay, that's a big risk. So you go to a casino, chances are you're going to leave without your money because it's rigged towards that. So you need to know what you're doing. You need to understand what is a good stock. All of this stuff. The options are something that uh, is built on. There's so many option strategies. I only focus in my mentorship program on 2 or 3 max. The difference here is that these 2 people in the 12-week program, they do it 300 times, these 300 transactions. So they get very good at it. And this is the right way of doing things. Some courses tell you about the 30 different option strategies, and you go out to the course learning about the names, but you have absolutely no experience with any of them because, it's as if somebody's
It's
telling you,
overwhelming.
right?
Yeah.
I like specializing. So we focus on 2 or 3, but we do it so many times, and people know you have to know how does it go wrong and what is the worst case scenario when it goes wrong. And you make a lot of mistakes in the paper trading account so that so that you can quickly see if you made a mistake. So one of the stories I have is one of the ladies that I teach, she told me that she was doing crypto and she lost $10,000 because she hit the wrong button. We don't have time for that, right? We have absolutely no appetite to lose money in what we're doing.
Yeah.
So if she has done paper trading, she would have no, you should not be going into the live trading without you being completely familiar with the screens and the buttons, and there's no possibility you clicking on the wrong button. And if you click on the wrong button, you know quickly that there's something not right. So risk mitigation is very important. Knowing what is a good stock, trying the strategy and the in a paper trading account, and also there's something called no margin. When you open an account to trade,
Okay.
if you put $10, they will allow you to buy stocks or do options with $33. It's like they lend you. It's the same as in real estate. You buy a house with 25, like basically a house with
Down.
100,000, you can put 25K and get loan for 75. So though I will never buy real estate without a mortgage, I will never use margin in stocks. Why? Because again, part of the beast or the product is that the stocks are very volatile. We know that. I told you that the market goes down by 30% every 2.5 years. So if you use margin, yes, you will turbocharge your profits. But when the market goes down, and it goes down very quickly, there's no way for you to know that it's going to go down today. You can lose all your money. And there's the story that I want to tell you. It's a real story from Canada. I think somebody in Vancouver, he decided to invest in NVIDIA, which is a good stock also, in my opinion. And he went up early, and his whole account is 100K. So he went with 100K, and he bought NVIDIA or sold options with NVIDIA. There's nothing wrong with that, other than there's no diversification. The problem here is that he did not buy with 100K. He bought with 330. He used all of his market.
Wow.
Okay. So it went up very quickly because he used margin, and NVIDIA is a good stock. However, in COVID, NVIDIA went down by 40%. When you use margin, you turbocharge your profits and your losses. So going down by 40%, and he was 3x margin, his account went down by 120. Minus 40 times 3 is minus 120. When the market goes down and you're in margin, they liquidate you. The broker who lent you the money, they don't care. They will choose positions and they will just sell it, and there's nothing you can do. He lost all of his money. It's a really extreme story because this guy did not understand the risks of doing margin. So again, part of my system, one of the main things in risk mitigation is do not use margin. You would be very happy with the profits when it goes up, and you will lose your shirt when it goes down. So we don't use, it's very simple. Don't use margin. If you put $100K, $100 or 100K or 100 million, just use this 100. Forget about the 330 that they give you. Okay, don't use margin. It's very simple. The first rule that Warren Buffett said is don't lose money. And the second rule is don't forget rule number one. He didn't tell us how not to lose money, but again,
do whatever you have to do, not lose money.
Don't lose money. Warren, what do you mean? So basically, a big portion of what you need to do, whether you got somebody to teach you or mentor you, is understand how other people lose money. That's the quickest way for you not to do the mistake. So no margin. So these are some of the risk mitigation stuff that we.
Yeah, I like the story you shared about the lady who lost a couple of thousands in the crypto market, and the guy who used a margin one to lose a lot of his money. So a lot of people are very hesitant to invest in the stock market because of the losses and the fear of the unknown. And like you said, some people are not training themselves. They don't even have the time to learn or what's going on in the stock market. So how do you help the students overcome this fear, this mental block when they come to you?
So I want to say something. If you don't have time to learn, please do not go into the stock market. Just simple as that, right? It's not a place to try. Unless it's a paper trading account. Open a paper trading account and you can play. But if you okay, please, it's as if I feel it's a little bit stupid. Like, please don't buy any refrigerator, right? If you want to buy a refrigerator, you got to do some research on, like, don't buy a refrigerator and then it doesn't fit in the space you have. Don't buy a refrigerator and it's too unreliable, right? So let's talk about how to learn. There's different ways of learning. Number one, all the information is there. Information is a commodity. It's there for free on YouTube. Okay. So you can learn. For sure you can learn. You have to give the time, of course. Like if you do, remember what I told you, 9 to 5,
don't have time.
Yeah.
Don't bother.
No, but here's the thing. Like, if you don't have time, then don't do it, right?
Yeah.
So the people usually who, it's not that they have time, they make time. They make time. I want to tell you something. If you tell me you don't have time, it just means you don't want to do it. It's simple as that, right? So I like, again, this is part of the personality of you name things with the right naming. So if I don't have time to go play tennis, it's really not that I don't have time to play tennis. Tennis is just not a priority for me to go and play. If it is, I will find time. So for me, I was completely bought to the idea of I need to learn investments because that's the only way I'm going to make money. I could have said I don't have time. Can remember I had a 9 to 5. I never really went home at 5. They usually work at 7. And when they gave me BlackBerry, when I went to BlackBerry, I was so happy. Reality is now I can have to reply to emails 24 hours a day, 24 hours a day, right? So I don't subscribe to I don't have time. If it is important enough for you, you will find the time. So same thing as with money. I don't have, it's the same thing. If you want it enough, it's basically just how big is the fire in your heart to do something. Okay. So you need to learn, for sure. You need to learn. The information is free on YouTube to turbocharge. This is what I did. My story is that I learned as much as I can free, but also I did not have time to waste. That's why I took a lot of courses. I took a course because I wanted to learn the mistakes of others. I wanted to get a structured way to learn quickly. I wanted to, basically, when you buy a course and you buy mentorship, you're buying results and time. You're buying it quicker. So information is there for free. YouTube can teach you, like, there's a lot of very cheap courses on Udemy and stuff. So second is invest in courses so that it gives you structured way. Third, mentorship is even better than courses. Mentorship means, like, right now, again, I'm an engineer. I don't know much about marketing. And when I started my business, I'm learning a lot about marketing. One of the courses I took in marketing was $7,500, very expensive. And the guy did not check on me once in the 3 months, never once. And again, when I designed my growth system, this was very important because I'm not just giving courses, like videos to people and leave them to their thing. It's a very active mentorship. So the type of mentorship you should be looking for with me or any other people. So one of the things we do is that every week we meet and everybody has to share their screen with all the trades they did. And we, as a group coaching, discuss all the trades, which is humongous learning opportunity for everybody. Because when I coach you, Stephanie, on the trades, when I ask you questions, and also the way I teach is that I ask people questions. I don't tell them the answer. Because I found out that every time I tell you the answer, like if somebody told me the answer, I will never retain it. But if you ask me something, even if I struggle the first, second, or third time, the fourth time I'm going to answer it and he corrects me if it's wrong, it sticks. So I ask them questions. What is the ROI? What should you do right now? Why did you go in there? What is the risk involved? What is the worst thing that can happen? By doing that, by week 6 or 7, people are so confident and they can see that they are making money or not. If somebody's doing something mistakes, they can catch the mistakes that they do. So just to summarize, you have to have a burning desire. If you're telling yourself you don't have money or time, it just means that it's not that important for you on your priority list. And there's nothing wrong with that because some people don't want to do it. Information is there on YouTube for free. You can invest in a course, invest in mentorship. That's quickly. We didn't talk about options. If you want me to explain a little bit what is options.
Yeah, definitely. I was going to go back to options because options is one delicate topic. Many people, and even many stock, how will I put it, teachers, those jobs, like, when it comes to options, just leave it. It's too complicated. It's not good for first timers. Just leave it alone. So what's your take on that?
It's not good for first timers if they do it by themselves or if they're not educated. You got to spend time educating yourself. So, but let me tell you the idea very simply. Options, coming from the word option. Option means you have the decision to do something or not doing it because you do have the options. Okay. Right now, you're the host of this podcast. You have the option of closing it in 5 minutes or in 1 hour, right? That's your option, right? So let me give you an example. The example is, let's say you have a house that you're putting it on the market and I'm coming and saying, I want to buy it, but I don't have money now. So, and I'm not really sure that I want to buy it actually. So Stephanie, if I paid you $2,000, can you lock this house for me for a month? Basically, I will have the option at the end of the month, whether I buy it or not. And if I want to buy it, I'll give you, I don't know, let's say your house is, let's say $1 million. I'm going to give you $900,000. So we can go into a contract with each other saying that I have the option within this month to buy your house when I want and if I want to buy it at $900,000. And you sold this option for me. I bought the option. And if I bought this option, I have the right to exercise it at any point in this month. You
time frame, yeah,
sold me this option, and for that you collected premium. You collected $2,000 for me to have this right. You, as the seller of the option, have the obligation to sell me the house if I said I want the house. So this scenario here is the same as what happens in insurance, for example. You know that insurance companies make money right, left, and center. I bought a lot of car insurance in my days, right? For the last 25 years, I'm paying car insurance, and they're making so much money. If you're the insurance company, Stephanie, you have made so much money from me because I didn't go into a lot of accidents. So every month, I am paying you for the right of, if I get involved in an accident, you have to buy the car from me at the price of the car before it went to the accident. You understand? Okay. So in this transaction, I bought the insurance. You sold me the insurance, and because of you selling me the insurance, I'm paying you a premium each and every month. Okay. And because I bought the insurance, I have the right, if I get involved in an accident, that I come to you saying, my car was $10,000. Right now, it's a write-off because the accident was high. You have to buy it from me at $10,000, right? That's the, and for that, you are making so much money, right? So this is exactly the idea of selling a put. Okay, so it's exactly the same. Let's say I have a stock at $200, XYZ at $200. I'm so afraid, same as the car, I'm so afraid that I will be in an accident. I'm so afraid that the stock will go down at 190 to 190 or below. You, on the other hand, are a sophisticated investor, Stephanie. You know that XYZ is a good stock. It's making a lot of profit. Let's say XYZ is an Apple, for example. You know that you want to buy it at 200 because you know it's a good price. When I come and tell you, Stephanie, let's have this agreement because I know you buy XYZ. I want to buy, let's go to this contract if the stock goes down below 190, let's agree that you will buy it from me at 190. And for that, I'm going to pay you $5. For you, Stephanie, you're saying, I like the stock. I want to buy it at 200. He's offering me to sell it to me at 190. That's really beautiful because it's even better than 200. And if I agree to do that, I will collect $5.
An extra
Effectively, I'm paying it at 185. So, and this is a transaction called selling a put. You sold me a put. You sold me the insurance on the stock at 190. I bought that option. I bought a put. Now I can sleep well, knowing that if it goes down below 190, I'll give it to Stephanie. I will exercise my option. I will, because I have the right at any point in this 1 month to give you that. So that's the idea. It's basically putting yourself in a position whereby you will have the option of exercising something or not exercising something. In this equation, we sell the insurance, we sell the put. Because as you know, with insurance companies, they're making so much money. And because we're selling insurance, of course, I do not want to sell insurance on bad stocks. That's why it's very important. That's why the R, research stocks, comes before the options. I always talk about what is a good stock before I go to options. If you're an insurance company and you're insuring houses from floods, you should not be insuring all the houses that is in the hurricane belt of Florida. Because the hurricane comes, everything will be flooded. You will go bankrupt. So you need to know what is a good stock. I only insure good stocks. Here's the thing though. If you insure bad stocks, you will make a lot of money. But when the time is bad, you will go bankrupt. So we only insure good stocks. And what is the worst case scenario in your position, Stephanie? If the market went down and the stock goes down below 190, you will have to buy the stock at 190, right?
Yes.
Correct, in this example. But you're not worried. Why? Because XYZ is a good stock. It's making a lot of profit. Let's say if it's Apple, I'm not really worried if Apple went down. Same as Meta. Meta went from 400 to 80. If I have to buy it, let's say, if I have to buy it at 200 and it went to 80, I am not worried because I know Meta is a good stock. Right now, Meta is like 600, 700. Went down a little bit. So that's the idea of option, is to put yourself in a position whereby somebody will have the right to exercise an option or not, and the other person who sold the option will have the obligation to do what the other person says. And for that, there's a fee involved. And that's the income generation portion of options. Very powerful to generate, because this $5 is more than 2%. It's more than 2%, which means it's 24% ROI per year, which is humongously good.
Which is amazing.
So you can use it to build wealth or generate income.
Yeah, so essentially within options, you're providing an extra layer of insurance to the buyer.
Yeah, that's one application, but there's different ways. Again, options, there's like 30 or 40 strategies. I just did once. But the whole idea here is that options, basically, there's something called a put and a call. And in each one of them, there's a buyer and a seller. So basically 4 basic positions. And by combining all of that, you can do 30 or 40 different strategies. I only focus on 2 or 3, get people to be really good at it. It's not just enough to learn how to drive the car in a straight line. You have to learn how the whole thing. What happens if somebody
reverse, how to
if
park,
there's a red light? What happens if the kid is running around? What happens when it's congested? What happens if you drive on a highway versus in a rural area? Like, you need to know all this stuff. You can't just push the pedal and move, and you think that you're moving the car. No, it's just much more than that. So you need to understand the whole thing, okay? So that you don't, again, don't lose money. So much more important than just making.
Yeah, so how would you say it's like the typical day or week for an options investor that's signed up on your program?
The way I do it, assuming that you went through the 3-month program, all what you need is 10, 15 minutes a day. So part of the exercise is that on the site, like at one time, it needs an hour or 2, maximum hour and a half, I think, is to research stocks and figure out your top 15 or 20 stocks. And that's easy using some screeners. So now you have the list of stocks that you want to sell options on. The reason we sell options is that the probability of you winning in selling is much more, same as the insurance example. The insurance companies makes a lot of money, Stephanie. Okay.
Yeah, they call them the institutional investors.
Yeah, so they make a lot of money,
huge positions in the market.
So we always sell the insurance, not buy the insurance. Okay. And of course, we do it with risk mitigation stuff. So once you have your list of stocks, you already know that these are good stocks. What you go and do is that in 10, 15 minutes, you go and you do some maintenance on these. If there's something called, if the transaction decayed quickly, means you made a lot of money quickly, you can close this transaction and make a new one. And you quickly add the health of your holdings. Doesn't take a lot of time. It's not a trader mentality and you need to react to everything happening. It's not like that. And then if you want to go into a new position, you just look at some charts to figure out what is the sentiment of the market, if the market is going up or down. And then you look at some parameters in the stock itself, in the chart of the stock, to figure out it's a good time to go in and not. And because you did 200, 300 transactions in the mentorship program, it takes you like 30 seconds to do the transaction. So all what it needs is 10, 15 minutes of you. Like sometimes, like at some point of time, I was in Disney with my kids in the lineup for Disney. And I said, I paid so much in this trip. So I made a transaction. I sold a put on Disney to just get some money. So really doesn't take a lot of time once you know what you're doing. Okay. It's not a day trading mentality whereby you need to glue to the thing all day. Not like that at all. It's much more calmer. You know what you're doing because you already researched the stocks. You know it's a good stock. Worst case scenario is that you're going to have a stock, you're going to buy a stock that is good. Yeah. It's very calm, really fits people who have 9 to 5, because I started when I had the 9 to 5. I didn't have time to do all this all the time.
Wow, that makes sense. So what would you say is your take on crypto? Because many people are adverse to crypto because of the many booms and losses, the meme stock and the get rich quick schemes that are associated with crypto.
So
do you
I am not.
Okay.
Yeah. My 2 cents, again, I'm not deciding for everybody. So far I did not touch crypto.
Okay.
I don't like the speculative nature of it. I like to have steady, if I'm going to end up buying stocks, I want to know that these are solid stocks. I don't have time for it. So saying that, for me, crypto is a lottery ticket. It can go really up, go down. For me, the way I tell my people is, if you really want, no more than like 2% of your portfolio can be in a lottery ticket like crypto. Okay, for people to put all their money in crypto, that's too speculative for me, too much gambling for me. So for me, I'm like Warren Buffett. I don't like this. I like the steady. Remember, Warren Buffett is a multi-billionaire, right? And he didn't do any of this stuff, right? So you can make a lot of money if you are responsible, you don't take risky positions, and you allow compounding to take effect, right?
Okay.
Just going in and out of every transaction, again, chasing the fact that it's a lottery, again, it's a casino. I don't like it. For me, yes, you can have 2 or 3% of your portfolio in crypto, only if you have a really large, and you will not really, if crypto went to zero tomorrow, you won't care because it's such a small amount of your holdings.
Okay. So how would you say that your background in engineering has shaped the way you teach financial literacy and investing today?
So I'm a very methodical guy. I'm started in engineering. I have a master's in engineering. I'm a project manager, so I know how to organize things. And so for me, I hate things that are speculative. I hate going. I sometimes go to the casino, but I like the way I do it is that I go to the casino and I know that if I'm paying $50, I'm paying it for the entertainment of it.
Hmm.
I have zero expectation that I'm going to go out to the casino with money because I know the probability that this will never happen. So for me, because I'm very methodical, I was trying to find a way. That's why I like real estate, because it's very clear the steps that you need to do. If you want to buy and hold, you need to figure out the rents. This is how to figure it out, the rents. You need to figure out the expenses, property taxes, project management or property management, the utilities. And it's just some math to figure out if it's a good or not and look at the area. So it's very methodical. In stocks, I struggled a little bit because in the beginning, I thought it's a casino and there's no way of methodically making money. But once I figured out, because it's very hard because nobody teaches this stuff, like very few that teaches very good. Once I figured out the behavior of the market, you know what? Now it makes sense that I will not panic when it goes down because that's normal, just exhaling.
Uh,
Once I know what is a good stock versus a bad stock, now I'm not very panicky. Like the way I tell people is that if you know that the kilo of tomato is $10 and you went to the market at some point and found it $5, you're not going to go to your house like everybody does in the stock market, get the tomato in the house to sell it at 5. You bought it at 10 and you're going to sell it at 5. If the tomato is now at 5 and you know it's a good tomato, it's it's time to make a salad. You buy more because it's $5.
yes.
So once you figure out these stuff and started logically to fit together, that there is a way, there is a responsible way, there's a way that makes sense, there's a way that makes me very calm when everybody else is panicking. Everybody around me
Uh,
is panicking with the tariffs. I am not, because I know that without the tariffs, the market would have corrected anyway. It goes up and down. So, and I know that the media works on the hype. So, and the stock market gives us opportunities when it goes down because of COVID, because Gaza war, because of the war with Zelensky and Russia, because there's I don't know, there's some unrest in Mozambique.
the
It
US
doesn't,
China war.
yeah, there's every day there'll be a reason for the market to correct. And if it's going up, it will correct. So it's behavior. We know that 1 out of 4 years, 3 years, the market goes up, 1 year goes down. It's just like that's the average. We know that overall the stock market goes down 11% compounded. That's huge
Hmm.
every year. I know I have a solid way of making it 24. So once, like, the engineering way made it very logical for me to seek stuff that is repeatable, to understand patterns, to understand. So basically, the idea, the objective is to invest in a way whereby you know that you're mitigating the risk. There's nothing with zero risk. But if you know that even if it goes down once every 4 years, overall the average is 11% up, it gives you calmness that it's not end of the world like everybody's saying when it goes down. So
Yeah.
engineering helped me a lot in terms of making it logical and find a way that a logical step-by-step way so that I can teach it to others.
So I know that based on how you teach people and how you've explained it, you'd have a lot of success stories because you're not just one that teaches, you also mentor your students. So what's one of your favorite success stories from your
So,
Wealth
the, so the
Academy that
success
stands
stories
out?
are like all of the people that graduate from the program so far. The biggest success is the going from paper trading, because I insist that they have to start with paper trading, even if they think they're ready, going from paper trading to live trading. So, for example, William, one of the guys, a really good guy, he like, again, he went a little bit, he cheated a little bit. So he went a little bit early and sold something called 2 covered calls, and he made something like $3,500 within the 3 months. Okay. Another person called Pete, and Pete is very risk averse, and he has a small account. Again, he's just started and he's making 2% almost in the last like few months. So the people who stick with this, they have two ways of doing stuff. Either the objective is to build wealth, and some of them have really big portfolios, and you can keep the money there. Remember, with 24%, you double your money every 3 years. And some people, they look for the income generation portion because, again, and I tell them, the more you leave the money inside the account, the more it will compound. But some people like to use this as money to go to trips and stuff. So let's say if somebody has $100,000, they put it there, they get something around 24K. Again, that's average within a few years. So 1 year, you're going to make more than 24K. Other year will make less than that. The average is 24K because if you look at the year without COVID versus a year with COVID, it's not the same. However, overall, on average, you should be expecting 2%. Remember, with the system that I'm teaching here, there's really not a lot of loss. The worst case scenario is that you're going to buy a stock that you know is good. So if you wait enough, it will go up, right? So there's no loss unless you panic and sell, which we don't do because we know we spend a lot of time on what is a good stock and whether it's cheap or not. So overall, great success stories. Really, the biggest success is that they don't need me after the 3 months, right? They don't need me. And there's other way, like, another story, Howard, who's a surgeon, he had a portfolio and he was in margin. And once I explained, one of the 12 weeks I have was the lecture on margin, and I scare people a lot about margin. And he went up as soon as he saw the lecture and sold some of his NVIDIA stocks because he didn't want to be in margin. And then after 2 weeks, he told me, Fadi, I think you saved me $50,000 because I was in margin and the market went down. Remember this thing when
Yeah.
because you don't know when somebody like Trump will go up and say there's tariffs tomorrow in all the world. How will you know that? How will you know that COVID will happen? So he went out of margin just by luck because my election was before this, and he did not get liquidated. So there's a lot of these stories that, but for me, the biggest success is for them to getting somebody who doesn't know anything about stocks and options, and in 3 months or in 2 months, actually by the first week they're selling options but in a paper trading. The success is that after 3 months they're all doing their thing and they're confident. So one of the things I did is that I took all the feedback that I got from people, and I took the videos, I put it into transcribed it and put it into ChatGPT, and I told ChatGPT, tell me what is the main things that people are telling that they're repeating. And I said, number one, confidence. So the fact that they're doing this thing in a paper trading, it's really not stressful at all because you
Mm.
can't lose money. So increased confidence. They like the support. They like the fact that we go through the trades because this is the thing that you cannot find in a book, right? The fact that we're
Yes.
like, it's somebody beside you when you ride the horse and telling you, okay, your leg needs to be here, put your head up. Like, these stuff, you cannot get it from a YouTube, right? Because it's not interactive. And the fact that a lot of times people learn from me talking, if I'm talking to Stephanie, everybody else is looking and thinking and asking a question. Stephanie, I think there's a mistake here. Can you figure out what is the mistake? And everybody's thinking, where's the mistake? I can't find the mistake. So all of that makes it extremely good learning opportunity. So possible.
Wow.
So
I'm sure lots of our listeners will want to join your academy ASAP because these success stories are mind blowing. So, lastly, what does legacy building a legacy mean to you? And what's a critical mindset shift anyone who is serious about financial independence should have right now?
for me, legacy, the thing is, if you like, one of the things I'm missing is the fact that my father is a doctor, my mother is a pharmacist, but they're not good in the sport of collecting money. So one of the things that I'm thinking of is that if you know how to learn money by investing, it's something that I know will trickle to your kids and family. And that's the legacy. The legacy is that you're not just trying to improve it in your lifetime, but for everybody around. Because once you learn a skill and you teach it to your kids and family, there's no stopping there, right? So there's no way I will not teach my kids about real estate investing and stock investing and options, because I know, of course, they will have to go to university. Of course, they will have to learn and have the skills of communication, hardworking, all of this stuff. But these are skills that having a job does not build wealth. Like, it doesn't matter if you're the best doctor in the world, you will not give your kid the title of a doctor just because you are a doctor, right? It stops with you, any employee. Okay. Same thing as self-employed. Again, if you're a doctor, your son is not a doctor, you cannot give them your clinic. But if you're an investor, yeah, you can give them your stock. If you're a business owner, yeah, you can write them the
shares to the business.
And here's the thing, though, investment and business owner, you can actually sell the thing that you have been building. As an employee, it doesn't matter if you're the best doctor in the world. You cannot sell your seat in a company to the person around you, right? So again, just read the book, Cash Flow Quadrant. As if you're an employee, it doesn't matter how high you are, you're getting the worst deal out of the four. If you're serious about learning, you need to move to the other three positions, mainly business owner and investor. You hit the jackpot if you're a business owner, you're doing a business about something that you like me. Yeah, I'm doing a business around something that I like, coaching people. So yeah, and you have to invest in yourself. Bottom line, you have to invest in yourself, time and money.
Yeah.
And time, money, and effort, right? Because you're doing something new. So it's not going to be easy in the beginning. Like, you have to be aware that it's okay for you to be frustrated. Like, the people in my program, sometimes there's a little bit frustrated. Like, it's not that I don't make it easy, is that I'm not trying to make it easy by telling them everything. Like, because the objective there is that they're successful by the end of the 3 months, right? Okay. It's not that I sold them a course and just left them like what this guy did to me. The objective is for them to be successful. So I don't shy away from making it difficult, not artificially making it difficult, but I'm not going to tell you, like, Fadi, what is the ROI here? I'm asking you, what is the ROI? How do we get the ROI? And then, like, they fluster a little bit once, twice, and 3 times. I tell them after 3 times. And then after they do that 2 or 3 times, now they know, right? Because they know I'm not going to just make it easy for them and just tell them, right? You have to do the math. And yeah, I think it's a good ROI. I'm sorry, but you need to tell me how much is the ROI. Do the math in front of me. It's not going to be like I make it easy because I'm a really good professor. I was told I make it very simple, but you have to have the stamina of also being able to learn something new. In the beginning, also, in my mentorship, basically we meet once a month, once a week for about hour and a half. And sometimes the session becomes 3 because I don't leave except when all the questions are answered. So you need to be like, you shouldn't be upset if I give you 3 hours versus an hour and a half, right? Because I'm invested in you. You need to invest in yourself too. So, right.
Yes.
So, yeah, basically that's it. And it's not that complicated. If you know, here's the thing, like, if you want to learn it, you can. Like, it's not that it's impossible. The question here is you find out somebody or a good course or some good mentor, but it's definitely something that it's not rocket science. Again, it's not gambling. It's not that I'm teaching people how to gamble correctly, because that's not it's actually how to invest properly. The idea is very simple. Not easy, but simple.
Like the way you put it, if you want it badly, you would make the time for it.
You'll make
and
the
you'll
time.
get it.
Same as like anything else. Yeah. If you like a person, you will make time for them, right? If you want to go out with a girl, you will make time for her. If you don't like the girl, you will not go out. Same thing as so it's simple. If you want it enough, you'll do it.
Make it a way to get it. All right. It's been amazing speaking with you. Like the time has flown by.
Yeah.
But we'll bring it to the second session. So this is just a firecracker session. I'll just shoot at you a couple of questions and you shoot back at me the first answer that comes to your mind. Nothing crazy, nothing serious. So tea or coffee, what works for you?
A coffee.
Coffee. Do you like it black or you like it with lots of milk or sweet?
Lots of milk. Lots of milk.
Okay. So when you're not teaching or investing, what's your favorite way to unwind?
The quickest way for me is that I have this game on my on my phone, and I just zone out by playing a couple of games. And play soft music. That's me too.
So if you had a megaphone right now, what's the number one money myth you would destroy?
Number one, what?
Money myth.
Money myth.
Mistake. Yeah, you would destroy.
That you can make money without investing.
Oh, okay,
That
that
you can
makes
build, that you can build wealth without investing by going to your 9 to 5. It's a myth.
Yes. So how can we reach you, Fadi? And you can also share a bit about your Wealth Legacy program.
Okay, so my website is legacywealthbuilderacademy.com. You can email me at info@legacywealthbuilderacademy. I'm also on LinkedIn, Fadi Habib, FADIHABIB. I'm also at Facebook and Instagram. So best thing is reach out to me on Facebook or okay. So the Wealth Academy, basically, my program is a 12-week program. Each session basically is, again, I tell them hour and a half, but most of the time it's 2 to 3 hours. So the first portion, first hour, is I talk about one topic. There's like 12 topics, from fundamental analysis, how to figure out if this stock is good or bad. Second, another session about how to know if this stock is cheap or expensive, because it can be good stock but very expensive. So, and then 2 weeks about something called technical analysis, how to look at the chart and figure out. So we know this is a good stock. Then the next step is this a good time to go into a position or not? And then 2 weeks about options, all the mechanics about the options. There's something called Greeks, in the money, out of the money. There's a lot of different puts, like what is a covered call, naked. There's a lot of things that you need to learn about options. And then we talk 2 weeks about risk mitigation, 1 week about margin, the other week about other risk mitigation. And then we talk about other strategies. So that's the first part, which is the 1 hour. The second part, which sometimes takes a lot, is a lot of Q&A and sharing your screen. And from week 2, even when people don't know anything, they start selling put again. And I'm not afraid, because they're all paper money, right? So we start by week 2 getting people to sell puts, even if they don't understand. And the reason I do that, because the more thing you do, as the weeks progress, they understand more and more and more. In the beginning, when they sell puts, they don't understand anything other than maybe 2% of the picture. But I push them to do it even if they don't understand, because there's this mechanics part that I want them to get used to it, to get out of it. I want people not to make a mistake when they hit a button. And the only way to do that is to do it a lot, even if you don't understand. And as time passes, and every week we add one layer of theory, they get it. So in the beginning, they are monkeys. They're just pushing buttons, getting this thing without understanding why. And each and every week, they understand a little bit more. They understand a little bit more of why, because by the 6th or 7th week, and then when I'm talking strategy by that time, the part of their brain consumed by this is new to me, this is a new screen, I don't know which button, has already went out. They know which button to know. So when I tell them the theory about it, how to choose a better transaction, they're totally with me. They're not, because if I explain that in week 1 and they are completely confused with which button, which column to look. Yeah. Anyway, teaching is my job, so I do that. So basically, it's a 12-week program, and the objective there is not to sell you a course. There's the videos, of course. All the sessions are recorded as well, so you can do both. The objective is for you to be ready to go to live trading, whereby you at least recoup the money that you spent on your education. That's the objective. That's how I measure my success. It's not by how much sales I made. It's who graduated and who's successful. This has been an eye-opening session, and it has been like one of my best sessions, because I'm passionate about stock investing. And like many people out there, I just don't know where to start. You hear about all these fancy names: stock options, futures, commodities, forex. Yeah, it's good stuff, and we know people make money there genuinely. It's just that, having lost money in the past, we don't know where to start. But with the way you've broken down everything and the intricacies in this session, and the mindset shifts, and even recommending the book for us to read to recalibrate our mind, it's been really helpful. I just want to say thank you so much for joining us on the podcast. Stephanie, thank you. I enjoyed it very much too. So guys, that brings us to a wrap of today's episode. If today's conversation resonated with you, do well to check out Mr. Fadi's Legacy Wealth Builder Academy. Follow him on LinkedIn and start making your smart investing insights. Until then, let's keep turning knowledge into action.
and breaks into banks. I've been your host, Stephanie, and we're out.
Thank you, Stephanie.